Hello everyone, welcome back to Infant Investors, the home for all new and non-investors. You already know my name by now, and I'm back with another investment video. Today we're going to be talking about Virgin Moolah. We're going to be talking about the markets booming. We're going to be talking about the top movers within my portfolio. It's my last 2 weeks of investing, how emotional. We're going to be talking a little bit about that. I've received one dividend payment this week. We're going to be talking about that, and I'm going to give an update on Freetrade's gain loss situation, the new feature that they've basically launched. So if you want to know more, please like, please comment, please subscribe. Help the channel get to 2,500 subscribers. We're about 50, 60, 70, 80 somewhat subscribers off that. So if you are brand new, Infinite Investors is about helping new and non-investors with investment, stock market, or other money related information, to help them better manage their money, better invest, and hopefully find financial freedom, or whatever their goal is in the future. So if you are a new investor and you want to know more about it, then please subscribe to the channel. We'll be happy to have you aboard on this journey. But let's crack on, mate, with it's been a great performance this week within the market. So if I take my scrubber and we go to the beginning, you can see that this week I started on around 19,128 is the value of my portfolio. It's then naturally organically risen to about 19,687. I'm going to just stop it there before that spike, because that spike was my next round of investment, which I'm going to talk about. But we can see that from 9128 to about 9687, that's what, I don't know, £500-600, maybe maybe higher than £600 on a monthly, this week alone. It's about what, 125 every day. And that's I find a decent level of growth to grow by £125 on a daily basis this week. So it's been a lot of positive market sentiment, and I'm going to give you the reasons why I think that is. So first of all, the markets are generally up because YouGov did a poll which basically suggested that Boris Johnson would win by the majority, which I think has helped with consumer confidence and confidence within the market in general. House prices are up by 0.5% in November. This is from the latest index survey conducted by Nationwide. We know the pound is up, which can technically usually lead to a bad thing, particularly for stocks with European or global exposure. But however, that has been offset by the fact that the German consumer price index remains unchanged. And if you think about the CPI, which is one of the inflation metrics, if analysts expected it to go to 1.3 but it's actually stayed at 1.1%, that actually means that inflation hasn't increased, which then means consumer spending wouldn't decrease, which then means stock values wouldn't then also subsequently decrease. So that has also been a positive thing. And it's just been higher general European Eurozone sentiment. The services sector sentiment has gone from 9.0 to 9.3. The industrial sentiment has gone from minus 9.5 to minus 9.2, so effectively less negative. And likewise, we can see that in the consumer sentiment sector, it's gone from minus 7.6 to minus 7.2. Also, US GDP has grown higher than initially expected. So it was initially expected to have grown by 1.9% last quarter, and it's actually grown by 2.1%. So overall, between Germany, Alemania, England, Angleterre, and the US of A, positive market sentiment, positive market conditions all round, which I personally think those are the factors that have contributed contributed a percent to the 600 oddish growth I've seen this week. But there's been some other factors for some particular stocks which I'm going to get into as well. Now, what that actually translates to into top performers within my portfolio, we can start with Barclays. And since the last time I invested, this is always the metric that I look at because of my modified dollar cost averaging approach. If you don't know, get to know. No, I'm joking. No, if you don't know, go to episode 2 of my portfolio update and I'll talk about my modified dollar cost averaging approach. But yeah, since the last time I invested with Barclays, I'm up 14.67%. Since the last time I invested with Facebook, I'm up 13.6%, which is also great. Since the last time I invested with Legal and General, I'm up 13.65%, and since the last time I invested with Lawyers, I'm up 12.96%. So I think those are some of my top performers this week, and it's been a great news all round. However, the trophy needs to go to a 1, a 2, a Virgin Moolah, because they have grown by a whopping 28.6%. And the growth can be attributed to Virgin's earnings. Now, I'm going to explain Virgin's earnings. I'm going to rhyme everything with Virgin now. It just sounds so good. I'm going to explain Virgin's earnings and yeah, why it's been such a phenomenal amount of growth. For me, it's been 28.6% since the last time I invested. You can see this month it shows 30.8%. It's been fantastic. So with Virgin, net interest income has gone to 1,514,000,000 compared to 851 million a year ago. If you don't know what net interest income is, basically the interest income net that a bank makes from the amount that they charge from lending to the amount that they give in savings or investments. So you want to see that grow, because you want to see that consumer cash comes into the bank. That consumer cash is effectively used to offset and to lend to other people. They charge a rate for that lending. They hopefully do good loans, which means people actually pay back those loans and they don't have to write it off. Once they pay it back, that profit is net profit. Then they're going to return some of that profit to investors and savers by way of interest rates through bonds, savings accounts, etc. But hopefully they want to return back a smaller amount than what they make. That net difference is the net interest income, and effectively they've gone up a considerable amount year on year, which is great. The net loss, however, has still gone down from 181, which it was a million years ago, 181 million a year ago, to 268 million this year. But we do know that a lot of that's attributable to PPI, so we can't be too hard on Virgin on that. That's already been priced in through the fact that the stock has plummeted over this course of this year, due to the PPI situation. So you can see from the way that the yearly graph has gone, PPI has definitely been priced into that. But also basic loss per share was 0.179 compared to 0.197. So effectively the loss that they're making, earnings per share is the profit that you make on a per share basis. The loss per share, if a company is not profitable, is basically the same thing but inverted. And we can see that a 0.179 loss per share versus 0.197 shows that actually they're making less of a loss year on year, which is a great thing. So with all of those factors combined, my question is this the turning of Virgin? Is Virgin working? Is Virgin money looking sunny? We'll find out in the next episode of Dragon Ball V. No, I'm joking. Listen, it's a good look, and I think that's been positive for Virgin, and you can kind of see that in the way that this graph is basically looking, and particularly in the way this last month graph is basically looking. However, it's worth calling out a very, very, very crucial factor is that Virgin Money did suspend its dividend, which some people see it as a blow for shareholders. I personally think that it's actually a very wise decision. Virgin Money only paid an annual dividend anyway, and I think in hindsight, with what's happened this year, they've gone through a lot, and as one of the challenger banks, they obviously have to be quite prudent with how they distribute their money. And loss-making companies giving out dividends generally isn't really a good thing from the market standpoint, just because the question becomes, can they actually sustain or maintain that dividend from a track record and a history standpoint, which is one of the criteria that most dividend investors do look at, or should be looking at if you are a dividend investor. So I do think it is a wise decision, and hopefully maybe in some point next year, if they actually start to turn a profit, that can actually change, and that can be a positive thing. I remember about 6 months ago being challenged in the comments, why aren't you running away from CYBG, as it was then called, but now obviously Virgin Money? And I think personally it's still a good challenger bank, and hopefully my faith in sticking with Virgin Money is going to be repaid. At the moment I'm obviously 21.89% up, but hopefully that can continue to increase over the next 1 to 3 years, which obviously was my horizon for Virgin Money. And to be honest, there's a message there. If you believe in something, stick with it. Opinions change, people will question what you do, and I don't mind being questioned, because sometimes it does actually reinforce to myself, why did you actually do that? Stick with your guns. Are you comfortable with that? So it's not actually bad questioning your decisions, but it's just about understanding why you invested at the very beginning. All of the stuff we've gone through in many videos this year, and once you understand why you chose to invest, what was your criteria, what was your horizon, what type of investor are you, then hopefully, you know, through the bad times you can obviously stick out through with a company, and hopefully then it can start to repay you and you can buy more shares, and you know, it can start to be profitable going forward in the future, which you know, can be a good thing. So, you know, always reflect back on that, and always keep going and keep motoring along. Now, it was my last what's going on here? It was my last round of investing, as you can see from this spike here. So that round of investing happened on Friday. That happened yesterday. And it's emotional, man. I will not invest again for the 18-19 season. Now, I might invest in December. Well, actually, I will invest in December, but because of the market holidays and so forth, it might actually not work out timing wise. So I don't know, it might come before the new year, or it might be just after the new year, my next round of investment, but I will count that towards my 19-20 season. That I'm doing my seasons like football. I started in December though, so a few months later, but that's the way I'm basically planning my fiscal and my seasons when it comes to investing. And hopefully, you know, I will put out my 2020 vision and everything will you know, yeah, we'll go in a stronger direction for the 19-20 season. If you want to know my current return for this year, I'm sitting at 6% return at the moment. So you can see, obviously, with Freetrade's profit and loss, that equates to 1,167.94 within my investment ISA, and within my smaller basic REIT portfolio, you can see that's 45.09 as well. So I'm happy. You know, 6% is more than I'd get in a bank or savings account. So yeah, I'm delighted with, you know, this being my first year investing, being my current return now, providing things don't just tank in the next couple of weeks. And the biggest risk to my portfolio is still trade war, the pile of topsy-turvy garbage that is. Hopefully I'm looking forward to closing this year at a good 6 or plus %, which I'll be very happy with. And then obviously when I share my 2020 vision with you, hopefully that will increase to a much stronger percentage next year. My original goal was 10% for this first year, so it wasn't too bad in the end, I guess. I definitely know some mistakes that I've made, which I will rectify next year. And I just like the learning experience that it's been for me. I think it's been a fantastic personal learning experience, and I really hope for you guys too. It's been a great learning experience. Just not these videos, I mean just yourself looking at your own portfolio, investing, making your own decisions, seeing what's happening, getting a feel for the market and so forth. I hope that's been a great learning experience for you guys as well. Now, I am loving this gain loss feature within Freetrade. I did say I'll come back with an update. It does include dividends. So this 1,167, I mean, I mentioned in my video it includes dividends because I married it up to Simply Wall Street, but I know there were still some questions against it because I think a lot of people are seeing some different factors. So I'll tell you some of the things that I've experienced this week with it. It's saying 1,167.94, which is slightly higher than Simply Wall Street, which is a good thing because, you know, Simply Wall Street is just a tracking tool for me, whereas this is actually my portfolio, so I'd want this to be higher than Simply Wall Street. And it's only by like about 20 odd quid that there's a difference, and that's typically because of the stamp duty and also because of like the forex exchange rates that I don't really know of when I'm buying the US stocks. And, you know, I think there's obviously some discrepancies there as well, which is the reason why. So I am happy with that as being, you know, the profit. When I compared that to Simply Wall Street. Also, when I added some money this for this next round of investment, as you can see here, what basically happened is that it then said that my profit was 2,000 and odd. So I did mention in that video, the Simply Wall Street versus Freetrade video, that I do believe that cash is considered. Now that cash has actually been invested and no longer is within the account, then I think that actually then it's not being taken in as a factor. But I think when it was actually in the withdrawable cash element, or the total cash element, then actually it was being taken in as a factor. So I don't know if that's the intended behavior, but if anyone from Freetrade is watching, and that's not the intended behavior, then maybe it's something to consider and to look into. But overall, I think it does the job. Obviously, if you guys have any issues, then obviously Freetrade customer service is 7 days a week, and they're definitely there to help. So I'm hoping one day there will be a Freetrade and Simply Wall Street integration, and smack my ass and call me Janet. That would be just nifty, mate. I would really love that, because then that just means I don't have to track it all myself, and it will just be automatically tracked, and I can portfolio manage and spend more of my time doing the things that I want to be doing, which is researching stocks. It eats into my researching stocks time just to obviously maintain and understand what's currently going on with my portfolio to the level that I want to feel comfortable with. But hopefully that will come at some stage in the future when the investment platform is up. So that's it for today's portfolio update. Go and check the property versus REITs video if you haven't done so. Go and check the gain loss versus Simply Wall Street video if you haven't done so as well. And go and fill your weekend with enjoyment. Go and have a great weekend. I'm hoping that your portfolios have gone up or shut up this week, and you deserve to have a good weekend. So see you later, player, and I will catch you next time with another investment video. Yeah, my 2020 vision, just for those of you that are thinking, when is it coming out? In the next 2 weeks. In the next 2 weeks, there will be my 2020 vision video. So if you haven't subscribed, put your notifications on, click that bell, and obviously when that video comes out, hopefully you guys will like to see from the outset what my criteria, my strategy is going forward into 2020. Other than that, have a great weekend, and I'll catch you later with another investment video. Toodles. That was very high pitched. Toodles. Just manned up a little bit. See you later.